Welcome back to Squawk on the Street. I am live today from Citigroup's Tech Leadership Summit, and let's bring in the host of the event, Citigroup CEO and Chairman Jane Fraser, to discuss her outlook and what we can expect here on the ground. Thank you for having us here again. It's great to be here.
Oh, it's fantastic to have you back again. And as you see, we've got a wonderful agenda.
A wonderful agenda, especially for this moment, because we're in a bit of a bumpy phase in the markets this week. Nasdaq's down 4%, and there's some serious questions about whether all of this AI hype is going to be worth it. What's your sense?
Yeah, there is a lot of hype in tech at the moment and the AI space, and some of it is earned and some of it is exuberant. And I think that's why I'm very excited to have this event in Pebble Beach with clients from the US, but also from Asia, Middle East here, to really ask the hard questions beneath the optimism that is out there. It's very dynamic at the moment.
When you say some of it is exuberant, what are you referencing?
Well, let's look at what's real, because when you look at the moment, the economics, because that's what we all care about, the economics are definitely favoring the scaled player and those that can invest at pace. But it is very dynamic. I don't think at the end of the day anyone is going to say that we underinvested in power and in capacity and compute. But there will be winners and there will be losers. And so how do we get at that? I think part of the challenge, Sarah, is you are measuring advantages at the moment in weeks, not even in months and years. And we're seeing AI transforming all industries and all businesses. It's not just an industry as of itself or in of itself. So it's very dynamic. We have clients here from defense. We have clients from sports. We have clients here from technology, obviously, and media. So there is hype, but there's also a lot of build and real economic impact.
What about the debt that is sort of fueling this investment and expansion, both in the private market and in the public market? Do you get concerned about that?
Oh, there's quite a lot in that question. So I'm not concerned about the capacity that is being built. I think it will get used. But what we do look at when we're looking at the private asset space in particular, credit quality is credit quality. Whether it's in the public market or the private market, it is no different. You don't worry about the investments and the credit decisions that a Blackstone or Apollo or Ares is making. Where I think we do worry more is the credit decisions that some of the smaller players will be making that don't have the same standards and are moving that credit into mid-tier insurance companies. Now, for Citi, 80% of our institutional exposure is investment grade globally. So I'm not worried for us, but it's one of the areas that we are keeping an eye on to make sure that the FOMO and some of the exuberance isn't turning into bad credit decisions.
In other words, you agree with Jamie, there are more cockroaches in credit?
There are a few around, yes. But it's not in the major established players with high standards. It's more worrying in some of the smaller spaces where there's not the same transparency.
And not necessarily systemic risk.
Exactly. It's more idiosyncratic to particular counterparties than something that is systemic.
You mentioned Citigroup. I mean, your performance, you have done this turnaround and you're seeing some pretty strong results, 9% growth last quarter, sort of records in a lot of your businesses. Where are you now on the transformation journey? Is it complete? Oh,
it's definitely not complete. I'm pleased with the progress we've made. I'm really happy that we're delivering results. But I've always been clear that 26 was a waypoint. It's not the destination. So while I'm pleased with progress, what I'm excited about is the upside ahead. And it's fun to be on the front foot again. You know, we're innovating a lot in the digital asset space, in cards. Our banking team is really doing a tremendous job. So across the board, the firm's on the front foot, and we have a lot of upside ahead, and we've got a track record now of delivering.
Where is that growth going to come from?
Oh, across the board. So our businesses are all performing well. You're really seeing them firing on all cylinders. So some of it will be deepening with existing clients. We've got great new client acquisition. But a lot of it is innovation. There's a lot of changes happening in the world, and I'm just happy to see the firm really at the forefront, driving a lot of innovation, be it in services, be it in markets, be it in our consumer franchise.
I mean, how transformative is AI for you and how you're using it in the banking world? I know you mentioned on the call, for instance, I think 100,000 hours saved, for instance, for software developers within Citi.
Yes, for me, one of the important pieces is how do we arm our people with the tools so they can get out of doing some of the more boring parts of their work and the chore side and really unleash more innovation. And so we have fantastic AI tools in the hands of 180,000 employees. We're pushing and training and encouraging them to use it, giving them upside. So performance evaluation this year, the AI tool does the first draft. Credit memos, the AI tool does the first draft. Checking if things are compliant, AI tools are doing that for us. So it's really helping us uplift our talent and have them focus on innovation, on giving clients advice, on selling, rather than on the service side. So I'm excited about it. It's starting to really drive productivity, but it's starting now to move into better client experience. It's starting to move slowly into the revenue generation because this is the tip of the iceberg.